To the corporate news that also hit the tape earlier this morning on a ticker that people are always watching on our website. That's Tesla, coming out with its second quarter delivery numbers, better than analysts expected, and Elon Musk tweeting to mark the occasion.
Yeah, exactly. Quarterly deliveries for the second quarter came in at 202,250, something in there. I might be off by 1,000, but that was a good number, good enough for a record number. There are a lot of concerns about slowing deliveries, particularly in China. Can the rest of the world kind of pick up the slack? I'm looking at a Tesla chart right here. It is bullishly constructive. On a short-term basis, we do have an uptrend here, confirmed by higher highs and higher lows. We've gotten above the 50-day moving average. And also this negative trend line right here, it just managed to break out of. So could find some momentum here to the upside when we get some more catalyst for it. We know we're going to be heading into earnings season, so I think we get their earnings in about a month or so. Don't quote me on that. But all in all, looking good, or looking better for Tesla, because we've really seen Ford, GM, and some of the other automakers, the more traditional ones, including VW, just kind of gain market share this year. Not only market share, but also stock price appreciation. So we'll have to see if this is kind of a reversal of sorts, where market flows favor Tesla as opposed to some of the other vintage automakers.
Welcome back, friends, for one more update from the world of EV stocks. In case you're new to this channel, please do consider subscribing. And if you live in the United States, you can get 2 free shares worth up to $1,850 just by following the link in the description. Now enjoy the rest of the video.
Tesla has confirmed that it managed to build 206,421 vehicles and deliver 201,250 electric cars in Q2 2021, a new record for the electric automaker. In other words, numbers roughly doubled from the same quarter 1 year ago. As had been previously reported, the expectations for Tesla this quarter were kind of all over the place, since it has been known that the company was facing some important supply chain challenges in Q2. However, the numbers are a proof of the demand of electric vehicles around the world, and how the expected growth rate that Cathie Wood has projected for electric vehicles around the world is intact. Many have rejected Cathie Wood's projection, but she expects the whole EV industry to almost double each year, every year, for the next 5 years. NIO reported a Q2 delivery numbers recently that also doubled from a year ago period, and the other stellar electric vehicle maker XPENG reported Q2 numbers that almost grew 7 times from a year ago period. This all simply proves that the famous S-curve of electric vehicle adoption that we often talk about is moving along expected lines.
There's a lot of fear, uncertainty, and doubt evolving in the world out there, but we're doing a lot of original research. We have a 5-year investment time horizon. And we are truly excited about the opportunities that the last few weeks have presented us. As you know, our minimum hurdle rate of return for any stock to enter our strategies is 15% at a compound annual rate over 5 years. That's a doubling over 5 years. Well, you can imagine what has happened over the last few weeks. Market activity alone has taken that projected rate, and again, it's just a projection. We could be wrong. The world could end. I'm sure I have compliance monitoring me very carefully when I say this, so I want to say it correctly. But according to our projections, what these last 2 weeks have done is handed those who are averaging in to these sorts of strategies, any innovation strategies, a gift, because we do believe we're on the right side of change, and disruptive innovation, transformative innovation is going to deliver exponential growth trajectories for many of our companies. In fact, most of them. The growth rates are enormous, and I think some people find them unbelievable. To give you an example, electric vehicles. We expect unit sales of electric vehicles globally, including China, to compound at an 82% annualized rate during the next 5 years. Most people, when they see a number like that, they'll just say, I don't believe it. It's not possible. And the reason for that, the reason we face that skepticism often, is because of where the automobile industry is right now. It's very mature. It's not growing. In fact, we believe it has peaked. And that means all cars are in secular decline if we are right that we are moving into more of a ride sharing, both human driven and autonomous during the years ahead. So this idea that electric vehicle sales could grow at an 82% annual rate, just not going to believe it. And so that skepticism festers, especially I would say among institutional investors whose analysts on the auto sector, for example, are mostly value analysts. So there are a lot of those disconnects in the world that are creating great opportunities for us.
So, all in all, these past few days have been fantastic for the EV space in general, and the confirmation of growth from all top players is an assurance to all investors that the EV story is well on track.